CCL Products. Remember, they manufacture and market soluble instant coffee, a market cap of about 3,700 odd crores. The case for the chat today is a fall in green coffee prices and their foray into retailing their own brands. They've now done this reasonably well in the past as well. Let's try and figure out how is that working out too. All that and more with Challa Srishant. He's the managing director of CCL Products, joins me right now on the show. Good having you. Thanks so much for taking the time out. Now, you know, when you ended FY18, you guided towards a broad range of 10 to 20% growth in FY19. I would presume there would be some assumptions that would have gone into that. Are those assumptions changing meaningfully, or do you believe the stage is set for you to be able to do what you guided at the end of the quarter?
Well, to be frank, our analysis was based on the current capacities that we already have. A 10% growth is something that which we were already 100% sure that we could achieve. The reason why I've given a broader range of up to 20% is because we have a new plant coming online in this financial year. By the end of Q2, it should be commissioned. One area that we don't have clarity at this point in time is how long the approvals are going to take from the customers, which is why we kept that flexibility. If we do get the approvals earlier, we might be able to reach closer to 20%. If we do not, then it will be in the range of 10 to 20%.
You know, a lot of people get confused about the impact that a fall or rise in coffee prices have on your business. I reckon from my past interactions that there is no material impact on you as a company with these, right?
Yes, that's 100% correct. In fact, we keep clarifying this each time. Our business and a business model is not a commodity-based business as most people may think it is. We supply to brands and brand owners, which is also why our model is not affected by the fluctuating green coffee prices. Prices keep fluctuating every year, and you would have noticed that our performance has been quite consistent. Our growth has been consistent year on year.
So, Srishant, why is it that, for example, there is a brokerage note from Edelweiss which has come out, which is saying that the falling green coffee prices, which are down about 15% YOY, are likely to impact revenue? I mean, would there be, I'm guessing that there will be an impact on revenue because the top line would go off as a result of the lower prices, but would that be as substantial impact?
Yes, it definitely will be. The revenue impact is definitely going to be there, which is why we say that the revenue growth is not the correct indicator for us. Green coffee prices have fallen by more than 15 to 20% from last year to now, which automatically means that there will be a proportionate decrease in the top line. 70% of our production cost is raw material itself. So there is a significant impact on the top line. The bottom line will give you a better indicator because our volumes are increasing. Bottom line is also increasing.
Interesting. Can I? Okay, you obviously looking forward to this retail foray of coffee. Now, tell us, what are the kind of numbers that you're working with? The reason I also ask this is because, in a manner of speaking, you're a relatively new brand. We already have established brands here. We already have some global tie-ups wherein Nestle is talking about selling Starbucks coffee in a packaged fashion as well. So there is arguably serious and more competition coming in, maybe more popular competition coming in as well. In light of all of this, where would CCL fit in? Would it be a strategy of taking away some market share into areas where you have dominant distribution, or do you believe that the market is growing so well that everybody, including you, will be able to create that small niche for themselves? Well, how will this retail plan shape up?
Actually, that's a very good question. I need to give you a bigger picture analysis first to get a clear understanding about what we are doing and why we are doing it in the domestic market. First things first, a country like the US, they consume about 80,000 tons of instant coffee in a year. Japan consumes around 35,000 tons of instant coffee. All these countries are a fraction of our population. We in India, we are consuming about 10 to 15,000 tons only. India is growing at the rate of 15 to 20% year on year. Unfortunately, there has been no innovation in instant coffee for many, many years in India. Across the world, there have been a lot of innovations, new products, new product categories that have been introduced. But in India, none of these have actually taken off. Something as simple as freeze-dried coffee. Today, it's available at a very, very high price in the market because one has to import it, they have to pay duties and taxes, and then they will sell it in the market. We have manufacturing capabilities within India, which also makes it more economical for us to produce and sell in the domestic market. All these factors put together, we felt that we had the necessary strengths to introduce the right range of products in the domestic market, which is why we are not just targeting the same standard vanilla type products that are already there in the market. We will have those products as well. But our focus is going to be on new products and new product development that we feel that there's a larger potential of growth in the market. This is one of the reasons why projections wise also last year we had achieved about 46 crores in the domestic market. This year we're projecting about 100 crores, and based on our first quarter performance, we are more or less on track for achieving this target.
And the vision is what? Does it grow exponentially in the years ahead?
Yes, it really does.
So, I mean, exponential is what? A growth rate on this smaller base of northwards of 30, 40, 50% compounded? Is that a possibility?
50% is what we are looking at.
For the next 5-6 years?
Yes.
At least. Okay, great. My last question really, because running slightly out of time on the show, based on the capacity that comes on stream in the second quarter as well, you mentioned about what will happen to the top line, which is also a factor of prices. What about the operational metrics and what about the bottom line numbers? We haven't had a chance to discuss this post your numbers, so it would be good to get a brief on that.
This year, the bottom line will be significantly higher than what we will see in the top line because there is a fall in the green coffee prices. Bottom line, we are looking at again between 10 to 20%. It depends on on a number of factors, including the new plant coming online and the customers giving their approvals. So the sales would depend on these factors.
Okay. Maybe at the end of quarter one, we'll be able to talk more numbers. But Challa Srishant, it was a pleasure talking to you today. All the best with the strategy, more importantly. We look forward to having that brew someday.
Thank you.